I'm sure you probably know by now, but there's a lot of uncertainty in the world. There's still about 10 million people unemployed, and a lot of businesses that closed down are never gonna reopen again. They keep extending all of the moratoriums, the eviction moratorium, and the foreclosure moratoriums, and you've probably seen 100 different videos on YouTube talking about the housing market crash. So it's not really a matter of if the housing market is gonna crash, it's simply a matter of when, because on average over the last 50 or 100 years, all the way back to even before the Great Depression, the housing market will reset or quote unquote crash, or the housing bubble will pop about every 10 years, give or take. One of the ones you're probably familiar with, whether or not you were old enough to actually go through it and witness it, is the Great Recession, that of 2008 through maybe like 2010. So we're coming right up to that time again. It's 2021 and a lot of people say that it's time. Some people say that we're past the time and other people say that we're getting really close. What I can tell you for sure is the numbers indicate that we're coming a little bit close to a market crash, okay? And it really doesn't matter when it crashes at the end of the day, whether it's tomorrow or whether it's in 5 years from now, at some point you're going to go through it, okay? So in this video, I'm gonna share with you not only how to survive a housing market crash, but how to potentially thrive during a housing market crash. Whether or not you're a renter, whether or not you're a landlord or a homeowner, no matter what, it will affect you. So before you click off of the video thinking that it isn't going to affect you, I promise you it will, okay? And I'm gonna be honest with you, regardless of the situation and regardless of when it happens, you know, a lot of people tend to look at a market crash in a bad way, but I promise you this, that if you change your perspective a little bit, it doesn't necessarily have to be horrible. You just wanna make sure that you put yourself on the right side of the equation so you don't end up losing a lot of money and getting foreclosed on or getting evicted or whatever the case is. But real quick before we go ahead and jump into it, if you wouldn't mind just doing me a huge favor and taking just a quick second to just smash the like button for the YouTube algorithm. So the first thing that you want to remember no matter what, okay, and the first rule of thumb that I wish everybody would just get through their head is you do not ever want to sell during a down market. Remember, whether you're invested in real estate or a stock or cryptocurrency or whatever it is, you only lose money if you sell when it is down. Even if you have rental properties during a down market, people are still gonna need to rent. And sure, you might have to lower the rents a little bit, and you might not cash flow as much as you want, but ultimately you don't need to sell, okay? Again, as long as you're buying the right properties, you're getting a good deal with a low interest rate, and you're not over leveraged. I mean, don't get me wrong, there's a lot of variables, and we're gonna talk about that here in just a minute, but just remember, okay, the bottom line is you never wanna sell in a down market, especially not if you buy at the peak, you don't wanna sell at the bottom, okay? You're never gonna be able to time it perfectly and buy at the bottom and sell at the top, so don't even try that, okay? But again, just don't sell for a loss and you can't lose. Because you have to remember that no matter what, the real estate market is a cycle and it is gonna go up and it is gonna go down over the course of your lifetime. There is absolutely nothing you can do to change it. And no matter who's the president, no matter who's in office, no matter who is running the country, whether it's Democrat or Republican, the market is gonna go up and it is gonna go down. So you may as well not put a ton of thought into it and just do your very best to position yourself on the right side of the equation. The second thing you're gonna wanna make sure of, so you protect yourself and hedge yourself against a market crash, and again, if you already have a house or if you're buying a house or whatever the case is, you wanna take this advice, I promise you it'll be worth it, and that is to make sure that you have a fixed rate mortgage. You do not want an adjustable rate mortgage. Now, let me kind of explain the difference so you understand. So a variable interest rate in a nutshell is an interest rate on a loan or security that fluctuates over time because it is based on an underlying benchmark interest rate or an index that changes periodically. And in a nutshell, all that really means is that the bank can basically adjust your interest rate at any given time based on the market conditions, which again can be really good. And a lot of times they'll sell you the dream on like an adjustable rate mortgage or even like a 15-year adjustable rate mortgage or whatever the case is, And in the beginning, it can be great because the interest rate can look amazing, but then if the market were to correct or the market were to crash, all of a sudden the interest rate can change drastically. So what I really recommend during a little bit of uncertain times is that you make sure that you get a fixed rate mortgage. Now, if you already have an adjustable rate mortgage, then you can go ahead and refinance into a fixed rate mortgage. And if you're going to buy right now, then just make sure altogether right off the bat that you go with a fixed rate mortgage and not an adjustable. And just to put it in perspective for you, on a $300,000 house with 10% down on a 30-year mortgage at a 3% interest rate, your payment is $1,399 a month. Now let's just say you had an adjustable rate mortgage, the market were to tank, and all of a sudden they adjusted your mortgage and your interest rate went from 3% to 7%. If that happened on an interest rate of 7%, your interest rate now went from $1,399 a month to $2,057 a month, okay? Now that is a big difference. And if you weren't expecting that and they did that to you out of the blue, especially during an uncertain time where maybe your job was a little bit uncertain already or your income went down a little bit during a market crash, I mean, that could really be the difference of you keeping your home versus you losing your home. Now, going hand in hand with not having an adjustable rate mortgage, another really big thing that I would definitely do is I would go ahead and I would try my very hardest to put at least 20% down on a property if I was gonna buy it. Now, that is obviously gonna do a couple of things. If you're not familiar, that is going to get you out of paying PMI, which is private mortgage insurance. And you don't have to pay PMI when you put 20% down or more. And if you're not familiar with what PMI is or private mortgage insurance, then it's real simple, and it basically is just where it insures the mortgage for the lender in the event that the borrower defaults. And although PMI usually doesn't cost a ton of money, it's typically between like 0.5% and 1%, which can add up to being a lot of money over time that you're gonna pay additionally on the house that you're buying. I mean, it can really add up to a lot of money, okay? So you definitely wanna make sure that if you can avoid that you avoid it altogether. And another really big reason is because when you put 20% down, then your loan to value ratio is definitely gonna be lower, and that's obviously a good thing, okay? So you wanna really remember that the more money you put down, the less debt that you have overall on the property. I mean, Dave Ramsey or somebody's gonna tell you to have no debt, but I'm not gonna tell you to have no debt because it's just not very realistic, okay? But again, not having a ton of debt on the property in the long run will really help you because in the event that the market were to go down, you're really gonna hedge yourself against the bank potentially saying that you're over leveraged and that you're underwater on the property. Now, obviously, if you can't afford to put 20% down, I totally understand, but I would really just ask yourself, you know, are you buying a house that maybe you can't afford, okay? I'm not trying to be mean, I'm not trying to be rude, so don't take that the wrong way. I'm just saying that a lot of people, you know, they're buying what they can't afford, you know, with money they don't have to impress people that they don't even like, okay? And you might not even need that much space, or maybe you can buy a house in the outskirts of town. I know there's a lot of jobs and a lot of companies nowadays that are telling their employees they can work from home anyways. So, you know, it's just something to consider, okay? And again, if you can, definitely try to put 20% down, avoid PMI, and get your loan to value ratio at the right number. Now, one of the most important parts of surviving a housing market crash is making sure that you're making enough money to survive. I mean, the number one reason that most people don't survive is they lose their job. They're not diversified, and ultimately their mortgage is too expensive, they can't afford to pay for it, and their house goes to auction. So you really want to make sure that you're making enough money to survive. And now, of course, I'm not asking you to predict the future here, okay? I'm not saying you need to be Houdini. I'm definitely not saying that you need to be able to go ahead and see into the future and have like a magical crystal ball, okay? It's not what I'm saying. What I am saying is that you're smart and that you use your brain and that ultimately that you're intelligent about making sure that you have a good job, a job that's secure, a job that ultimately the best prediction that you could possibly predict, you could at least say with a decent level of certainty that, yeah, if the market were to correct, you know, my job is pretty secure. I provide a solution in the marketplace and I don't see my job going anywhere. And if anything, I think in a market crash, my job would be more valuable than it is today. And if you are making really good money right now and you do have a really good job, don't be a fool. Don't go blow a bunch of money, okay? You know, make sure sure that during the good times of life that you save your money, you create an emergency fund, you get a side hustle, you invest your money, okay? You really want to make sure that when things are good that you create a good solid cushion. I see so many people when things are good, they get arrogant, they get cocky, they go buy a brand new car, they buy their wife a car, they propose in the Bahamas. They do all these crazy things, and you don't want to do any of that, okay? You want to make sure, I'm not saying you don't want to enjoy your life, you definitely do. You definitely want to enjoy your life, but you want to really make sure that you save money, okay? That you invest your money into things that are going to pay you, that you get a side hustle, and that you make sure that you're taken care of no matter what. Now, this will also be really important for the next thing that we're going to talk about, which is not only how to survive during a housing market crash, but how to thrive during a housing market crash, which is what I feel like everybody wants to know. So remember, you're trying to put yourself in a secure position, so not only, again, that you can kind of live during a housing market crash, but you want to put yourself in a position to maybe take advantage of a housing market crash. And again, look, it's what all the wealthy people are gonna do, okay? So if you're watching the video and you're tired of this massive wealth gap, then, maybe put yourself in a position to be on that side of the equation over there, so when it does happen, you take advantage of it. So remember, when we're in a market like we're in right now, we have a very low supply and a very high demand. But remember, when the market does eventually flip, that'll flip also. You'll have a high supply and a low demand, which means that if you're flipped on the right side of the equation, you'll be able to take advantage of maybe another property. You'll be able to buy a good investment property, a good rental property, and who knows, maybe you'll even be able to do what they do on TV, and you'll be able to buy a property to fix up, to renovate, add value to, and put back on the market. And again, really the only thing that you have to do during that time is find a good deal. A good deal in a nutshell can be found in any market, but specifically in a down market, you can find a good deal, you can buy it below market value, then you can hold on to it and put a tenant or a renter in there, or again, you can renovate it, put it back on the market, and you can sell it for a profit. And you'll be able to take advantage of that because you got smart during a market like this, and you created an emergency fund, you created a side hustle, another stream of income, or whatever the case is, to the point, or maybe even got your credit good. You went and you paid off a bunch of your credit card debt, because the average American has a ton of credit card debt, okay? And ultimately, again, you put yourself on the right side of the equation so you can take advantage of that, right? Because right now, as it sits, there's gonna be a lot of people that do take advantage of it. And the reality of it is, there's not gonna be a lot of people that are just normal average Americans that take advantage of it. Those, the normal average Americans are typically people like you, people like me, are normally the ones that ultimately, we get shot in the foot in a down market, right? Because, we don't have tens of millions or hundreds of millions or even billions of dollars to just go buy up all the real estate when everybody else is losing all the real estate. So again, you just wanna make sure that you do your very best to put yourself on the right side of the equation. When the market crashes, you literally pull the trigger. And there's so many ways to find good deals in a down market, okay? I talk about it a lot on my channel. I even talk about how to find good deals in a market that we're in right now, okay? Which is like a red hot seller's market. We're actually always finding good deals, so definitely go check out other videos on my channel. Again, if you haven't already, make sure to subscribe and like the video, of course, okay? But again, you can just knock on people's doors. You can drive for dollars. You can look at properties that their weeds are overgrown, the windows are boarded up. You can go to the sheriff's sale, the county sale, okay, the auction, all kind of one and the same. But again, the moral of the story is there's a lot of ways to find a good deal in an up market, a down market, but especially in a down market, okay? So definitely make sure that if that happens, not really if, but when, that you're positioned on the right side, again, of the equation. I really hope that you enjoyed the video. I tried to make this video as simple as possible, so if you did enjoy it, I would really appreciate it if you would take just again a quick moment to just make sure to go ahead and subscribe to my channel, to smash the like button for the YouTube algorithm, to check out all of my other videos on my channel, and I look forward to seeing you in a future video.